Well, welcome back to the Leaders in Housing Counseling call. This will be a little bit different call for us. Normally we have a whole raft of guests and one thematic thing that pulls it together. But we thought we'd do this something a little differently this time. We thought that we would do a presentation where we just talk about what we're working on. And, our goal here is both to keep you informed about what we're doing, but also there are times, and we'll try to be as explicit as we can about it during the course of the call, where you and your work could be very helpful to what we're doing. And also, I think we're very interested in making sure that this stuff is relevant to your work and your organization and your clients. And so the idea behind today is really, here's some high points of a number of things that we've got in the hopper and things that are moving forward, just to give you some of it, a little bit of an update, but a lot of it is more that these are the central things that we think will really help housing counseling, will help home ownership in America, will help people who are renters, things that will keep us to be vital. And we hope that some of you will help us bring some of this stuff home. So some of it will be in the political sphere, but some of it will be more programmatic. All of it will be things that we think can be, that we hope will help make your work better in the future. So with that, let's just pop through the agenda quickly. So we're top on our list is going to be this $100 million for HUD housing counseling. Pretty crucial to everything we're doing, and your role in this is very crucial. This is a highly political endeavor. Latika will spend some time on it, so give you an idea of where we stand. Ellie's just going to give you an update on the latest on the Homeowners Assistance Fund and lots of the work we're doing with others and Treasury to try to move things forward. I'll give you an update on the Black Home Ownership Collaborative and where we're going with that, and especially around the down payment assistance and where we'll land, I think, on what the opportunities are. We're also going to have a conversation that we're just starting about prioritizing owner-occupied homeowners. We posted a little bit on the listserv about this. So this is the problem of people coming in with mortgages are not competitive in the current real estate market. Not everywhere and not every neighborhood, but in areas where some of our people really want to buy and where they are having trouble finding affordable housing. This is one among several problems, but nobody's really tackling this particular side of it. We could really use your creative thinking about how to impact it. And so we'll talk a little bit about that. The Eviction Crisis Act and housing counseling. We've talked about this before, but we've had, Latika and I have had some very good conversations with leadership in the Senate on this, and we'll kind of give you an update and some things that some groups might be able to do. But we hope that this will help institutionalize rental counseling in our world. And then on HUD housing counseling contracting, some of you hopefully participated. We're trying to get HUD to be more expansive and maybe more responsive about what they permit in as allowable expenses and make it easier for you to build capacity and do marketing and do those things that make your work even more valuable. And then we've talked about before about the housing counseling career path. Housing Action Illinois and David Young have been particularly involved in this. Ellie's been doing a lot of work as well, but trying to figure out how to build a more robust way of recruiting people into the housing counseling field who might not have thought about it before, but who might be mission-driven people who can really expand our ranks on the expectation that there's a lot of new money coming in. Yay. I mean, a lot of good work. All of us have participated to get there, and there's hopefully more to come. but that will also mean we'll have to have more certified counselors and trying to get our arms around how to make that work more successfully. And then the good work on improving housing counseling technology with the data standards and improving housing counseling technology. This is the work that our technology team has been working on, and David's been the chair of that group. They're coming around the bend on big issues, and we could also use some thinking on your part about this as well. So that would be helpful. And I think the strategy is that we'll have just a chance to ask questions if you want to put quick questions into the chat box as we're going along. And we'll have a brief pause between each section, and then certainly there'll be chances at the end, I hope, to get some questions in as well. But feel free to kind of pepper us along the way. We're always happy to talk in a great deal more detail on each of these topics. And we'll really just touch on them in the beginning, but there's a lot of work going on with all of them. And we'll do a quick plug on NHRC membership and close out the call. So with that, let's get started. So Latika, please fill us in. What's happening in Congress with our work?
Good afternoon, everyone. Thank you all for joining us. So right now we are pushing for $100 million for FY 2022 appropriations funds for housing counseling assistance. Now is the prime time to be reaching out to your offices. We're confident that with your voice, we will be able to accomplish this goal, because as foreclosures, forbearances are coming to an end, eviction, it's going rampant all across the United States. It'll be crucial that housing counselors have the funding necessary to provide the services that our community really leans on. So you may have already seen our sign-on letter. If you have signed on, we really appreciate it. If you haven't gotten the chance to, it only takes a few minutes. Sign on to our ask. It'll really show support for this movement when we send our letter to Congress in the next few weeks. Also, call and email your House representatives. It's really important that they hear from you, the people working in their local districts, and what you all are doing on the ground as far as housing counseling goes. It's really important to us and to all of housing counseling across the nation that we have the funding necessary to provide great services that we do. We understand that you're working tirelessly. Lack of resources is a constant issue. Every year we push for a higher ask. We have gotten some pushback on the $100 million, but everybody understands that, this money is necessary. Funding is necessary, and this unprecedented pandemic, the aftermath of this will show that, housing counseling is really important. So thank you all.
And Latika, so how many signatures have we got on the sign-on letter?
So we have about 169 signatures. Our goal is to really have at least 3 organizations represented in each state. Right now we have about 20 states that have less than 3, and about half of those we don't have any organizations represented on our list. If you would like me to run down the list of who we haven't heard from so that you make sure that your organization is represented, I'd be happy to do that.
Sure, just take a second. Okay. Well, and I just would say this is probably the most important thing you can do. That right now we need to really show Congress that there's local support for $100 million, and that you are a presence in their state, and that you're doing the work you do. And so the sign-on letter is easy and quick. It takes a little bit more effort to ask for make an appropriations request of a House and Senate member. We gave you a little wording to use. It can be very, very simple, but and some of them have forms that you can fill out. Latika will help you fill out the form. There's always some technical questions. They're easy for us to do, but really just the message is, what are you doing in the field? How do you use the money? And going for $100 million and asking. So most House and Senate members, if they're not on appropriations committee, put in a programmatic request letter to the THUD, the Transportation HUD Committee, and And so we're trying to get those numbers up. The House ones that we're probably past the deadlines for a bunch of them, but so far people let the agencies squeeze in their requests. So we know that they're still getting in. The Senate hasn't started their timeline yet, so that you can do it now, and it's perfect timing. But try to get it done quickly. And actually, Latika, can you also, when you go off, put the link to the sign-on letter into the chat box? That would be helpful. So what states don't we have anybody for yet?
So right now we have no authorized organizational signatures in Colorado, Connecticut, Delaware, Iowa, Indiana, Idaho, Kansas, Nevada, North Dakota, Oklahoma, Oregon, Rhode Island, South Carolina, South Dakota, Utah, Wisconsin, and Wyoming. So if your state is represented in there, we would really appreciate your signature. I will be sending around the link to the form in the chat, and you will see it shortly. Thank you so much.
Wow, that means South Dakota beat you out? Okay, so so anyways, and if you're an intermediary and you've got affiliates there, please sign them in for this as well, because this is part of the political lay of the land that we do. And so the sign-on list should show up in the chat book. Sign-on link should show up in the chat box soon. So number 2 on our list is the almost $10 billion in homeowner assistance fund, which we've talked a bunch about. Ellie, what's the latest?
Well, first, there is a question about the 100 million.
Yes.
So how much does this 100 million translate on average for housing counseling agencies?
Okay, so it's hard for me to answer that question, but let me take a stab at it. You typically take out 4 million for administration, leaves us with 96 million. And this year, we don't know what the awards were. Last year's award was, oh boy, I think it was 53 million. And so this would be not quite doubling the amount of money that's available. And then, it still will be on a competitive basis that it's distributed on. But, you could see a substantial increase, like 80%. This is, we haven't gotten it passed yet, and we don't have I don't have a calculator here working out the exact percentages, but it will be a substantial increase, and the largest increase that we would have seen in the HUD housing counseling budget, with the exception of when we got NFMC funding. So thanks for the question.
Great.
Okay, so Ellie, you're still up though.
I just have to get my webcam on. Hi, everybody. All right, so I am here to talk with you today about the Homeowner Assistance Fund. We've sent a couple of emails out about the fund, and then an update about the fund, and then a clarification about the fund. But we wanted to spend a little bit of time here today letting you know what's going on. So just some basics. Oh, and I also just want to let everybody know, I understand from a few people that there's an issue with downloading the PowerPoint that I attached to the session today. No worries, that will go out with the recording of this. So look for that in your email by early next week. Usually we have that all said and done and out to you all by the end of business on Monday. So look for it there. At any rate, the Homeowner Assistance Fund is $9.9 billion that is in the American Rescue Act in order to assist homeowners who are experiencing some kind of issue related to COVID-19 and the pandemic. The way that it works is that there is a minimum of 50 million for each state and all of the territories. And then and those requests for funds need to be submitted by this Sunday, April 25th, 2021. It is a very simple form that needs to be filled out. It's not a request for an amount. It is just a certification from a qualified representative of your state that says, yes, we are interested in these dollars. If that is not done by your state or territory by April 25th, then your state or territory does not have any further option to access these funds. There's no do-overs, there's no extensions. This is it. For tribes and tribally designated housing entities, there's a specific 498 million that is set aside, and they have until the end of September to actually request their funds. And then there's an additional 30 million that is specifically for the territories. And again, they have the same deadline as the states, and that's April 25th. And then the funds must be expended by September 30th, 2026. So there's a few years in order to expend these funds. We sure hope it doesn't take that long. One of the things that I want to be really clear about is that you as a housing counseling organization cannot submit the request for funds. It has to be an authorized representative of your state. That might be your governor. It might be somebody from your housing finance agency. That's how that submission happens. I understand that some groups were concerned that they had to submit something, and that is not the case. It has to be your state. What you do need to do with your state is reach out to either your governor or your housing finance agency to let them know, number one, about this deadline, and to make sure that they understand the importance of submitting the fund request form in order to be eligible to get the funds from the Treasury, and that also that you are open and willing to be a partner in the outreach efforts, in the intake efforts, and if you have the capability in your state to be an entity that actually helps with accepting and processing applications, letting them know that you're open for that. And the reason that that's key is that 5% of the funding that each state receives can be used to pay a HUD-approved housing counseling agency for counseling or education efforts targeted to eligible homeowners. 15% is allowed for the states to use for planning, community engagement, needs assessment, and their administrative expenses. And that 15% and that 5% are taken off of the top, and then what's left, not less than 60% of it, has to be targeted to homeowners having incomes equal to or less than 100% of the area median income for the area or the United States, whichever number is bigger. These targeting methods may include partnerships with housing counseling agencies. Just to be clear, these are the things that it's important for you to reach out and let your state and housing finance agency know that you are happy to be part of. And I've included some resources here. These links will bring you to, the first link brings you to the actual allocations that have been calculated for each state and territory. The second link brings you to the notice of funds request, which is the form I mentioned earlier that states have to complete and submit by April 25th and tribal entities by September 30th. And then the first one, and then the final one is the Treasury guidance that was recently released, letting organizations or states know what they need to do and what the eligibility is for homeowners who might apply for these funds. So that's kind of the high level about this. There's a lot more detail, and there's more there's more going on in the advocacy world around trying to make sure that as much as possible, the states are doing pretty much uniform programs across the country. One of the things that really came out from the hardest hit funds is that it got to be difficult, particularly for organizations and servicers, to really manage all of the different programs. Some of the states had trouble spending their money because of some of the requirements that they had put on. So there's a lot of back and forth conversation going on with the Treasury Department about program development. So more to come on that. And at this point, I will check quickly to see if there's any quick questions that I can answer. Somebody's asking if we know which states have already requested the funds. I don't off of the top of my head. There is a list that that we are maintaining when advocates have heard that they're aware that a state has actually asked for the funds, but I don't know off the top of my head. Somebody mentioned that we lost the PowerPoint. I don't know if that is still happening or if people can still see it. If people want to let me know in the chat whether they can still see it. Okay. Do you know which one's already? Okay. We don't have a list of who has not submitted, and we won't get one from Treasury. We asked about that, and they are not able to provide that. It is Treasury that will be announcing the allocation of funds, and I'm not sure about the date around that. All three of the links are in the PowerPoint. I'm aware that New York State has requested the funds. Just so people are aware, Joseph Sant from the Center for New York City Neighborhoods is part of the team that is working with Treasury on the development of a kind of template for the states to use for the programs. Okay, several people are saying that they are not seeing the PowerPoint.
It's on handouts, if that helps.
It's not, it's, some people are saying that they're not able to see it.
Yeah. So we'll send it out.
I'm going to stop sharing my webcam and see if people can then see. Aha, I see that it's not showing.
Okay, so should we keep rolling though? And you can troubleshoot that.
There we go. Somehow the presenter got changed. Okay, all right, so if there's any other questions, I will address them at the end, and we'll move on to you, Bruce.
Okay, great. So, great. Well, so let me start working on the Black Homeownership Collaborative. So we've talked about this in the past, but Simone Griffin and from Home for USA and Bailey Childress from NeighborWorks America were co-chairs with me for the down payment assistance and for the housing counseling work streams. They were two of the prominent work streams, and I will report one of the first to get their actual work product in. But there were also a number of other ones that are work streams. Actually, let me step back for a second. So the Black Homeownership Collaborative is to do what one would expect. So this was formed by the National Housing Conference, and which is a long esteemed one of the early housing promoting organizations in the country, and kind of a mix of consumer and financial industry players. And it's had a key role in developing early housing legislation, including the Fair Housing Act and many other things. And they had been meeting with NAREB as the two co-chairs. NAREB is, of course, the Black Real Estate Agent Network, And they had been meeting for the last 6-9 months, something like that, around this issue. And in December, felt like time to broaden this out and produce some work product that, and the goal was to really impact, especially what was going on with the Biden administration and in Congress, but also to get initiatives that might work in the industry. And so they have 7 work streams, and beyond down payment assistance and housing counseling, there's also credit and lending and how to make credit more available for Black borrowers. And they also do think about, there's always a question that it's an interesting one that David Dworkin, who's the head of the National Housing Conference, says, you know, it's sometimes they get the question, well, why not just people of color in general? And his reply is, well, that's a fair question, and there's a lot of work that needs to be done there on the one side, but also the damage done in, to Black home ownership in this country, and the gap that has been there has been so long and so consistent that there needs to be a special effort to turn this around, and that's what this plays into. Though a lot of the programs, I think, have a broader impact on more populations. So credit, they have a section that they're doing work on civil and consumer rights. A lot of that's back again. Sorry about that. Not sure what that is. And then homeowner sustainability, which is an area I'm very interested in. So this is the idea that we should have tools so that people, if there's a downturn in the economy, why should that mean that so many people lose their house? You know, it's not up to them. If COVID-19 hits, is that a reason for somebody to no longer be a homeowner or be a renter, for that matter, too, not being able to pay their rent? And so are there things we could build into the system that would act like an insurance policy or a buffer to help get people through the low points? And not just if there's a disaster, but if, you know, you're temporarily unemployed or something like that. And in some ways that this reduces risk for the lender and the investor, and should have some sort of longer term industry commitment. Housing production, of course, we know there's a housing availability shortage, and in many communities, not everywhere, but a lot of them, and we underbuilt coming out of the foreclosure crisis, and both rental and home ownership. And so they have on their list I think the typical tools you hear about in terms of increasing production, though I think the major investment that the Biden administration is looking at is probably the most exciting. And then there's a whole conversation about marketing, which is very interesting, and it reflects the experience of people who used to be at Fannie Mae, and Fannie Mae had done a whole study about Black home buyers and what the process felt like for them. And as they describe it, people who actually got a mortgage were more discouraged by the process than people who were rejected by the mortgage. And they felt like the system was kind of working against them in order to even qualify for a mortgage. And that was a disturbing message, and it's a message that, you know, I think we all are afraid of rejection, and, you know, this echoes in a lot of life experience for some people. What that message is today and what works well, we don't know, and so the idea would be that there'd be a deeper dive into this area as well. I'm going to spend a quick minute on the down payment assistance bill, because this is the most ongoing program immediately coming out of the Black Home Ownership Collaborative, and the timing was perfect because in the House and Senate there are various down payment assistance initiatives, and Maxine Waters, who's of course the chair of the House Financial Services Committee and long-term California House leader, who's worked a lot on housing issues, is sponsoring a bill that we've been able to contribute to in very positive ways, and it reflected a lot of what the collaborative came up with in terms of their product or program. And so the idea is at $20,000, up to $20,000 down payment assistance, so substantial money, and a possibility if somebody is socially and economically disadvantaged, an extra $5,000. So it could be as much as $25,000. And the money is limited to people who are first-time home buyers, and that's the standard definition, which means that you haven't owned a house in the last 3 years. And there's some exceptions if you're going through a divorce or are from a domestic abuse situation and now a single parent, those sorts of things that allows you to do that. And one very creative one, which is that if you spent any time in foster care, that they waive that rule, which is is interesting because these folks can be quite disadvantaged, and it's a nice thing to try to make an extra effort there. So it's first-time home buyer, but the other big concept is it's what they call first generation, and the idea is that you don't own a house and your parents didn't own a house, and the definition really came from a lot of work from the National Fair Housing Alliance, from the Urban Institute, and from the Center for Responsible Lending. And they've done a deep dive over the last 6 or 8 months, and came up with this as the best way to target for potentially underserved Black home buyers. And it does, and it helps actually almost as many Latinx borrowers, or it's a potential pool of that, and certainly will help some white families. But the goal was to try to figure out what would maximize the most impact in the Black community, and this targeting was the best you could get in a world where you can't do racial lending, or it's very limited what you can do in racial lending, and racially targeted lending. So the idea was this is a better surrogate than what's traditionally done, which is just income. And we know that hasn't worked, because here we are with 30 percentage points difference between white home ownership and Black home ownership in this country, and coming out of the foreclosure crisis, there's been a retrenchment, or we've lost ground from the gains we made under the CRA era. And so the idea is on first generation, and just as an extra twist to all this, the definition of first generation originally started that the parents could never have owned a house, and so this is an example of where there might not be intergenerational wealth to share with someone else. So that was the thinking. They've broadened out the definition a little to say that it's just that the parents don't own a house currently, and what that does is it adds tens of thousands more people who might be able to qualify. It reduces the amount of documentation that you might have to do. We're hoping that they will use self-attestation, so that people can attest that they and their parents fit into this category, and that it would be audited at some point. One of the things we found in the forbearance crisis was that very good research done by Chase Institute showed that people were completely honest in this, and really did the right thing, and only people who really applied for forbearance and attested that they needed it were people who had seen a decline in income, and not all of those, as we know, even used the forbearance. But the good news was that there was very little evidence of people really trying to abuse the system. So apply that as well into the home ownership field. There's a group in Massachusetts that runs this program in the Boston area, and self-attestation for their program has worked reasonably well. So this is that we hope that'll remain in the legislation. One other quick thing that we threw in there that we think will get into the final bill is that the rule of thumb is that you don't own property currently, and we know that in the Black community, it's reasonably common to have a share in family legacy property. So here in Philadelphia, early on in our mortgage program, where we had a first-time home buyer requirement, and people say, well, I do own a 1/12 of a share of a farm in South Carolina, and I'm not letting that go. I mean, that's our heritage. And so the committee understood this completely. They were sure that the Chairwoman Waters would be very, very sympathetic to this issue. We know that it's pretty widespread. And so that will be, we expect that wording will get added in soon enough. We're working on other parts to this, but that's kind of the gist of it. We hope that it will be included in the infrastructure bill. If you followed all of this, there's this thing called reconciliation, which means that you can pass a bill with only 50 votes as long as it's related to the budget. So the big question is, can this particular program be related to the existing budget as opposed to being seen as a new thing? And there's a lot of infrastructure stuff that everybody wants to get done. This fortunately has a lot of support, but we'll have to see what happens. And we will move forward as much as we can. But this is, what am I saying? I left out the other nice thing, which is that there's a housing counseling requirement to get the program. And we ended up having a small compromise in there so that Treasury will need to have some rules to establish if somebody's highly qualified for a mortgage, they could waive the need to get housing counseling. We're hoping that will be fairly limited, and that this will produce a natural stream of people for you to help with your generate business for your programs, and really help have you have some real leadership on Black home ownership in your community. So it will apply. It's not racially targeted. It does have a commission that gets studied about how to, to identify if there's some possibilities to do something more specific, but it's really just, it's partly a study at this point. So that's it on down payment assistance and the Black Home Ownership Collaborative. I'll add one more thing on the question of how does it help, what can you do to help? I know we've had a lot of interest in this. Thank you for that. And some of your comments have been extremely helpful in all this. They are going to issue their 7-point plan, and they're going to ask for groups to sign on. And as soon as that's actually functional, we'll put that on our list, and you're welcome to join there. What's most helpful for us right now is is sort of getting feedback on the elements of a plan and what you feel like would help make it successful. And that's the kind of work that we're really trying to do to expand the program. Ellie, are there any quick questions?
There are. So I'm going to ask you two really quickly. One is there a bill number? And then secondly, if you could put a finer point on how this addresses fair housing issues if it's specifically targeted at Black home buyers.
Well, it's not, again, it's a surrogate. So it's available to anybody, and it's, but it is also more likely that it's a Black and brown household that will, where the home buyer is not a homeowner themselves, has not been for the last 3 years, and their parents aren't currently a homeowner. So Urban Institute did a study and to try to kind of narrow down what the best indicators are. So it kind of gets at that, but it doesn't have any implications in terms of making choices around specific races or ethnicities. There are some attempts to kind of create what they think of as more affirmative programs, but they're still in the hopper. And this one is more designed to be helpful rather than directive on that. What was the other part of the question?
Well, I'll just, for a finer point, in other words, if a white home buyer fell into that category of no generational home ownership in the previous generation, and they met the income guidelines, they would be eligible for the down payment.
That's right. That's right.
Okay. And the other question was, is there a bill number?
So there's not a bill number yet, and it's probably going to go to markup in the next few weeks, but there is a text, and you can go to the House Financial Services Committee website, or you can just Google, and it's down payment towards equity. It's probably called the Down Payment Towards Equity Act of 2021.
And is there a number attached,
No,
an amount?
Not yet. Oh, a dollar amount. Oh, well, so late breaking news. So we, in meeting with the staff, they were talking about $4 billion. And then we were like, well, that's okay, but it doesn't really get us that far in terms of what we're trying to do. And I learned this morning in a meeting that they're talking about $10 billion. So I thought you meant bill number, but you're talking about the amount.
Yes. So there's just a couple of questions about, is this going to be a grant, or is it going to be like a silent second, or, have the terms in general been discussed?
So it'll be a forgivable loan, and it with the same 5-year traditional 20% forgiven each year for the next 5 years.
Okay. Next
Good.
topic.
All right, excellent. Thank you, everybody. So prioritizing prioritizing owner-occupied home buyers. That was my typo. If I put that in, it should be home buyers. And we essentially, we've been hearing a lot from you about the challenges your people are having in trying to buy a house and to find an affordable house. And on one scale, it's the set of issues around if somebody's coming in and they have so, for example, with an FHA mortgage, some real estate agents, or maybe it's real estate agents buyers, are saying we won't handle FHA, or they won't handle VA or USDA. And I know when we were doing some work in California, putting together events, we heard that people coming in who wanted to use down payment assistance were disadvantaged because theoretically it took a little longer. So there are those kind of procedural things. We're hearing in some markets that real estate agents are saying, if you want to be competitive on your deal, you have to waive your appraisal contingency, which of course is very dangerous. You have to waive your right to an inspection. And those kinds of things, which again are disadvantaging our buyers, and I think are grossly inappropriate. And then what we've been hearing a lot about recently has been cash buyers coming in and out competing. And some of it's because they can turn around faster, but sometimes it's because they have very deep pockets. And some of this might be very wealthy individuals. Some of this might be the investors, local investors, or not local investors. So In Miami, there's been a lot of buying up of condos and other properties with by foreign investors just as a long-term investment. And then an area of particular problem is these hedge fund investor groups that are coming in and in some cases buying whole developments and having them be rental and or buying all the properties that are on a available and often aggressively bidding up the price so that because they have such deep pockets and because it's really seen as an investment rather than as an owner-occupied affordable housing unit, that it really escalates the prices. So we're trying to figure out what to do about this, and so we're convening some meetings with advocates and others to help to start think about, well, what could we build into legislation? Are there some best practices? Is there something to do around expanded first look opportunities so that first-time home buyers get first look, or maybe home buyers and nonprofits? Are there ways to set standards about what should be included in every agreement of sale? All those sorts of things, and we're definitely very interested in ideas. One way to think about all this is about the is that the real estate agents, the realtors, are advocating that you can the seller could get a substantial discount on their liability under capital gains tax if they sell to an owner occupant. There's a number of things that are problematic about it. We're really trying to struggle to figure out what the best handles are. So any thoughts you've got on that, we're very, very interested. We put out a call last week, an email just about, are you seeing it in your market? And I'm using some of what you're saying and quoting when we're talking to other advocates about this. So very helpful on all that counts. Do we have any questions here? I know we're going to need to get moving.
There was just, no, this is another DPA question. But there is somebody who wants to be part of this conversation. And so if anybody wants to be part of this prioritizing owner-occupant home buyers, excuse me, what's the best thing to do? To email you directly, Bruce?
Yeah, just shoot me an email. And
okay,
if
I'll put your email address in the chat box so everybody has it easy.
Good. They don't have it already. Okay, I'm going to do really quickly on the Eviction Crisis Act. Latika and I have been meeting with the senators who are the sponsor of the Eviction Crisis Act. You can Google that as well. It sets up a program to basically intervene in evictions with legal services and some resources to help intervene on evictions. We think this is a very smart program and could be very helpful to people. The one thing is, it doesn't say that housing counseling agencies should be included in this. We've had the Cleveland Housing Network, CHN, talk about their excellent program. I know there's one in Philadelphia. I'm sure there's others out there. Please let me know if there are others out there. We'd like to get that included. The sponsors are Senator Portman in Ohio. So shooting emails to him from Ohio groups would be very helpful, saying you support the act, but would really like to have housing counseling included. And similarly, Senator Bennett in Colorado. We really need to hear from Colorado groups telling them that you support the act, but could really contribute to having them included in the bill, having housing counseling included. So that's the opportunity. They were both, warm to the idea, but did not commit to doing it. And we're going to touch base with other advocates to try to get some support for it. unless there's any quick questions, I'd love to hand it over to David.
Nope, no questions. Next topic.
All right.
Okay. Hello, everyone. I hope that wherever you are, that you're having sunny weather like we are having in Chicago. And I'm David Young. I'm the Director of Capacity Building with Housing Action Illinois. I have a question for all of you, and we have a poll that we're going to ask you to respond to. And my question is, for those of you who are responsible for hiring, are you finding it difficult to hire qualified counselors? And if you could answer that question, that would be very helpful. We've heard a little bit of that in the Chicago market, and so I'm just wondering if you are seeing similar situations in your communities.
We'll just give it a few seconds. Looks like about 45% of you have voted. So David, is the poll showing on the screen?
The poll is, the question is showing, but the results are not showing yet.
Okay, so we're showing, mostly people are saying yes, they are having trouble. Then the second largest group is they haven't had to hire recently.
Okay.
Very small number of people say no.
Okay.
Yes, it's 60%, 34% are saying they haven't needed to hire recently, and 6% said no. So
Okay.
pretty dramatic.
Okay. Well, that is in line with what we were thinking, and we know that with individual certification coming online a couple of years ago and us coming close to the deadline, that there were a number of veteran counselors that opted out of certification, and we also know that there are some counselors that chose to retire. And so it's important that we figure ways to bring new people into the housing counseling career fold. And one other thing that I'm sure a lot of people, when you are asked this question of how did you become a housing counselor, or if someone asks you the more direct question, is this what you always chose for a career? For many of us that are involved in this field, the answer is no. We had no idea that we were going to become housing counselors or be involved with the housing counseling industry. It is something that we either fell into from something else or got introduced to. And this is an opportunity where we can grow our industry, and we can help people to look at our industry as a true career path and not something that an individual just happens to stumble upon or falls into. So we know, just as Bruce and Ellie talked about, there are, and Latika talked about as well, there are a lot of resources, financial resources that are coming into our industry over the next couple of years. And that means that there's an opportunity for tremendous growth. There's an opportunity for us to serve geographies that we aren't currently serving, and to serve more households than we've been currently serving. But in order to do that, it means that we have to have qualified counselors to serve that role. This also means for existing housing counseling organizations, we understand that it's going to be very difficult for you if you have to, after August 1st, if you have to train someone to take the exam, and that they are limited in terms of what else they can do while they're waiting to pass the exam and become certified. that having to have someone on payroll to do that could be very, very difficult for most organizations. So how can the National Housing Resource Center help you in order to be able to serve more people? And the way that NHRC is doing that in conjunction with Housing Action Illinois is creating a housing counseling career path. And through this path, we intend to educate, I should first say we intend to do outreach and marketing to folks that could be interested in a housing counseling career, to recruit them to our industry, excuse me, and then provide the training that they need in order to understand what it means to be a housing counselor and prepare to take the certification exam. And then once those individuals have completed that career pathway training and passed the certification exam, that their information will be posted to a jobs board where there can be links between people looking for a housing counseling position and organizations such as yours who are looking to hire a certified counselor. So if any of you are familiar with Housing Action Illinois, you know that we developed the online study group, which has helped several hundred of you to prepare for the certification exam. We are using some of the components of that online study group as a foundation for this new career pathway. And in addition to those core pieces, we're also adding information about the history of housing counseling, the purpose of housing counseling, and the impact of housing counseling. And as I said, our goal is to produce a multi-session training that will give people the skills that they need in order to pass the exam. And then once they pass the exam, can be hired by your organization. And then because they've already passed the certification exam, they're in a better position where you can provide on-the-job training and more specific information about your organization, but they've already gotten the certification out of the way, so you don't have any issues in terms of, for example, if you are receiving local housing counseling funding and your funder says you can only pay certified counselors. So that is a reason why we are looking to design this this way. We also intend to do significant outreach and marketing to attract people to this career. And one area where we're going to start is looking to recruit from historically Black colleges and universities. As most of you know, a significant number of people that we serve are African American households. And so we would like to recruit more African American students to consider becoming housing counselors. And so we're going to do that from reaching out to HBCUs. There's a program that Intermediary Home Free USA has been doing with HBCUs that's been very successful, and we're hoping to piggyback on that. We also have another question, another poll question for you about recruiting locally. So Ellie, if you would just put that poll question up and get people to start answering it, then I can talk about that a little bit. So the question is, would your organization be able to recruit qualified people from your community, former clients, for example, to consider becoming housing counselors? So if you can answer that question, we would appreciate it. And I bring this up because we are hoping we can launch our first cohort of 25 to 30 students by late spring or early summer. Our intention is to offer scholarships for each person that will cover the cost of tuition as well as their exam fee for certification. And just as we plan to market and outreach to historically Black colleges and universities, we would also like to extend an opportunity to housing counseling organizations to recruit people in their own communities that they think would make good housing counselors. And if you have a person or persons that you think would be good, then we can offer a scholarship to that person so that they can take the class, then take the certification exam. And then, of course, once they've taken the certification exam, then they're eligible for hire by a HUD-approved housing counseling agency. So, Ellie, do we have any results from the poll?
We sure do. So 15% of the respondents said yes, 48% said yes if training scholarships are available, 3% said no, and 33% said maybe.
Well,
So definitely,
sounds
definitely favoring towards yes if training scholarships are available.
So 65% to do it, one way or the other. That's good.
That's good. And we anticipated that that's how many of you would look at it. And that's why we are looking to do this on scholarship. One other thing that I'd also like to mention as a part of this that I think is important for the career pathway is we've had conversations with housing counselors over the past couple of years about, now that you're certified, what would you like to see? And for a lot of housing counselors, it's been very important that there is some type of acknowledgement of that milestone. So is there a designation that is available to housing counselors? So for example, we all know when you see the R logo, that is a person who is designated a realtor and has taken the exam and the continuing education in order to wear that logo. And so can there be a designation for certified housing counselors? And we have had a conversation with the Office of Housing Counseling and specifically the legal department at the Department of Housing and Urban Development. And the answer is yes, that creating a designation for the housing counseling community is acceptable to HUD. So we have to determine what that designation would be, but it is something that we see going hand in hand with this housing counseling career path. And so you will hear more about that, but our goal is that once a person has decided to become a housing counselor, has taken the career path, has passed the certification exam, then they'll be able to add that or affix that designation to their name so that hopefully in the near future, that designation will be as well known as the R for realtors. So I wanted to make sure that I mentioned that because we understand for the industry that many of you have not felt like you were treated as the professionals that you should be. And it is our goal with this career pathway training and also with the designation to make sure that you are getting the recognition as the professionals that you are. So, Ellie, are there any questions about the career pathway at this point?
So there's a few questions around salary, and I'll just comment that while there's a wide range depending on market and location and geography and so on, the average is $40,000 for a direct service housing counselor, and the average, of course, is a little higher if it's if somebody is a program manager or a senior counselor. And it ranges anywhere from $30,000 to $60,000, depending on all of those different variables I just mentioned. But David, you and I had a conversation about about the salaries, and I thought you might want to talk a little bit about that.
Sure. So we do anticipate that salaries for beginning housing counselors are going to go up a bit, but the position that we as an industry need to be in is to show the value of our work and the importance of our work and how many people we are serving, which then puts us in a position to request the $100 million in congressional appropriations, for example, to be able to request additional support from financial institutions because of the very important work that we're doing. And then that allows us to be in a position to pay larger salaries. Bruce talked about a little bit earlier that if we were able to secure $100 million in housing counseling appropriations from Congress for fiscal year 2020, that would be potentially an 80% increase for organizations. So, for example, Housing Action Illinois, we are an intermediary that serves 4 states. We have 32 subgrantees. We've just added 2 more, but our fiscal year 20 appropriation was about $1.3 million. So if we were to see 1.3 million plus an additional 80% of that amount, that means larger allocations to each one of our subgrantees, and each one of our subgrantees is in a position where they can pay more in salary to their housing counselors and program managers. But the ability of us as an industry to be able to do that is really dependent on us being able to show our impacts and our outcomes and how we are benefiting people in the housing space. And so I kind of just led right into the next thing that I want to talk about, but I'll stop for a second and see if there are any additional questions before I move on.
Well, just a couple of people have asked about how the HECM certification fits into this career path, which I think is a valid question.
So at this point, the HECM certification remains a separate process. And so what I would expect would happen is that an individual would first pass the individual certification exam, and then once they've passed the individual certification exam, could go on and take the HECM certification exam. HUD at this point, I don't believe, has provided any type of guidance on whether there's going to be a consolidation of those programs and certifications. So we would have to continue looking at those as 2 separate things.
And next topic.
Okay, so housing counseling technology, improving housing counseling technology with data standards. Some of you have probably heard me talk about the data standardization working group that NHRC formed. In 2017, at a NHRC meeting in Washington prior to the HUD intermediary conference, we had a long discussion about the need to not only improve our data standards, but agree on what those data standards should be, and that we should all be collecting the same data in order to better show the impacts and outcomes for our industry. But that meant bringing a team together to actually sift through all of the different data points in order to create that data standard. So In I think late 2017, I was asked by NHRC if I would chair that working group. And so that's what we have been working on for the last couple of years. We spent a lot of time trying to figure out, what those data points should be, and should we create our own standard, or are there other standards that we could look at? And as we were having this discussion, we had an opportunity to meet with HUD and with Freddie Mac that had just used the HUD 9902 and had added the data points from the 9902 to a reference model created by a nonprofit called MISMO, which stands for the Mortgage Industry Standards Maintenance Organization. And the whole purpose of MISMO is really to maintain a standard or a way of communicating that many professionals in the housing finance industry could use. So whether you are a servicer, an originator, an appraiser, whoever you are, that there is a common language that everyone is using and everyone understands, which means that whatever computer system you're using, whatever software you're using, that these tools have the ability to communicate with each other. So because Freddie Mac and HUD had worked together to diagram the 9902 to MISMO, it seemed to us that it would make the most sense for us to do the same thing. And so in 2018, we actually received or 2019, excuse me, we received a grant from Freddie Mac that allowed us to move in that direction of aligning our data with MISMO. So we broke this project into 3 different phases. The first phase, which we call data set 1, was to hire a consultant and go through the existing MISMO reference model, which has over 4,000 data points, and determine which of those existing data points are relevant to us. Which ones should we be collecting? Which ones are important? And so we combed through those thousands of data points and found a couple of hundred that we felt were important to us and help us to better explain what we're doing and the impact that we're having. Data set 2 is what we're working on now, and data set 2 concentrates on what data points do we as a housing counseling industry consider important but are not currently found in MISMO. So beyond the 9902, which is in MISMO, are there other things that we consider important? And I'll give you an example. We know that currently in MISMO, there is a zip code for where the person purchased, but there isn't necessarily in MISMO the zip code on where that person is currently. And it's important for us as an industry to be able to show where did that person start via zip code, and then once they purchased a home, where did they end up? Did they end up in an area of opportunity? Did they end up in a majority minority neighborhood? What happened? And so it's important for us to be able to collect that information. So that's an example of the data point that we're looking at. So right now we're collecting data point suggestions from across the industry. And then we're going to go through all of those. We're going to rank those by importance and relevance, and then decide which are the ones that we want to include in this process. And then we will move on to phase 3. And what phase 3 will do is we will take data set 1, which are the data points that are already in MISMO, the data set 2, which are the data points that we'd like to add to MISMO, and we will then go through the MISMO change process, which is the outline for how to add new information to MISMO. And so we will make a case for these data points. We will defend that case on these data points, and then hopefully get these data points added to MISMO. What is the benefit of all of this? One, it means that all of the systems that we use, the client management systems, will look to include the data that we consider important in their systems, that it would be built into their systems so that we have this ability to collect the information across the board. If we have uniform information, then we have the ability to show our impacts and outcomes. And in the previous conversation where we talked about salaries for housing counselors, if we have the ability to show that our work is having tremendous impacts, and we know that it is, but we have the better ability to show that, then it is much easier for us to seek and receive the resources that we need in order to continue doing this important work. A perfect example would be fees for service. I know that many of us in the industry have not been happy with the fees that lenders, for example, will pay for a successful borrower. People would like to see that number higher. But how do we show the industry that they should be providing or paying a higher fee for those services? Well, it's by standardizing our data and showing our impacts and outcomes. And if we are able to do this, having standard data, and all of our client management systems are collecting this, we also then have the ability of aggregating all of this data across our client management systems and showing on a statewide basis or a local basis or a super regional or a national basis everything that we've done, the impacts that it's had, the number of mortgages that have been produced, the value of those mortgages, how long it took for people to become mortgage ready, and if we are able to then show Bank A, this is how many mortgages you generated from our buyers, from people that we helped to become mortgage ready, and this is what it meant for your bottom line, we are in a better position to request more for our services. So that is another reason why data standardization is so important. And a final thing that I will mention is that having the data allows us to do a much better job in terms of prediction and response to crises. So most of us last year, when this pandemic started, we instinctively geared up because we knew that with the impact in the economy that we were going to start seeing large numbers of not only homeowners but renters coming to see us with foreclosure and eviction issues. We didn't see as many of those numbers come through because of the various moratoriums, but we are still gearing up that once those moratoriums expire, that we are going to see people and we will be in the position to serve them. But by having these common data elements, we will be able to see the trends, understand what's happening, and be prepared to better serve consumers, and quite frankly, be in a position of reaching out to Congress and other funders before something happens and saying, we see what's coming, here are our recommendations, this is what needs to be done so that we don't have an epic financial calamity. So I will end by saying to folks that that we are looking for data standardization to really help us in terms of showing the impacts and outcomes that we have. I would also ask that if you have any ideas regarding data points that you would like to see, please reach out to NHRC. I will actually, I don't have this now, but I will send this to Ellie so that she can send it out. We do have a Google sheet that our consultant is keeping, where we've been collecting some of these suggested data points. And if you have any other data points that you think would be important, I would ask that you get those to us so that we can include them. Even if you think, oh, they probably already have that data point, send it anyway. It doesn't matter. We can eliminate the duplicates, but it's much more important that we can collect as much information now from people of what data points they think are important, so that we can move forward. Our goal with the data standard is that we will start moving through the change management process to add data standards or to add data points to MISMO later this summer, and that hopefully by spring of 2022, we will, within MISMO, have what we can point to as a housing counseling data standard, so that if anyone is interested in you know, what data points, what do they need to know for the housing counseling industry, it will be easily located within the MISMO reference model. And so thanks to all of you who have provided support thus far, and thank you in advance to the many of you who are going to come up with suggestions in the next days and weeks. Thanks.
Just quickly, David, could you say what MISMO stands for?
Sure. MISMO is the Mortgage Industry Standards Maintenance Organization. It is a nonprofit organization that was started by the Mortgage Bankers Association.
Great. And Bruce, take it away.
Excellent. So before we shut out, there's one more thing I want to talk about, which is contracting with HUD for housing counseling services. And we periodically convene these conversations. Some of you participated in ones about how to design the NeighborWorks housing counseling program that was coming up to streamline it. And the most recent one has been on, if you're deeply involved with the HUD contracting, you'll know that a number of the things that we would think of as very basic for our business are not necessarily allowable expenses. So we've had a lot of problems with organizations needing to be able to charge as a direct expense, as a contract expense, things like telephones and photocopiers, and especially in this huge transition we had from into the virtual space and moving out of our offices to work from people's homes, having laptops and computers and security, and so the technology upgrades and subscriptions that are needed, paying for Zoom, paying for GoToMeeting or whatever the platforms are that you use, making sure you have proper security, all that stuff. Well, a lot of the way that HUD had looked at these in the housing counseling program was that these should not be direct expenses. They should be included in the indirect cost, which you have a direct indirect cost ratio, and it might be a little bit more or less. 10% if is the default one if it isn't. But that often doesn't cover these kind of very direct costs that have to do very specifically with the business. The idea was, let's make the list of what all that looks like and take that to our to HUD and David Berenbaum, the Office of Housing Counseling, that sort of thing. And it's, I think it's going to be, it was a very robust conversation. So the items I mentioned to you, translation services and translation materials. Can we charge intake staff members to the contracts? Can we make sure that we are using the on-the-job training for somebody rather than until they're a certified counselor, will we be able to bill for their work while they're in training? So a lot of those very specific nitty-gritty details. We're hoping to have a meeting with HUD in early May. David Berenbaum, the head of the Office of Housing Counseling, has been quite receptive to new ideas. He's certainly been a very vigorous director. And so we hope to clarify some things that make it easier to bill for activities that are normal activities and make it allow more capacity building expenses to get covered. So just to let you know, but there we go. So join NHRC. You can get on the website what our dues schedules are, but supporting housing counseling advocacy, it's what we do. This gives you a good introduction to all of them. And we still have the benefits of the credit report discount with CoreLogic, which seems to be working quite well. And, frankly, it went up a little bit this year, but all the credit reporting went up this year. So it's a reflection of what's happening in general. And then we still also have the partnership with Savvy, the online program for people to use for student loans, which I'll point out is a really useful tool, and it's getting underused. So it's available there. It's free to anybody to do the basics and then to use the subscription pieces, which are quite useful if somebody's using it to apply. We have a deep discount if you're a member of NHRC. So with that quick note, I'm going to close things out unless, Ellie, are there any quick comments that we still have in the hopper?
There are a couple of people were asking if you needed any housing counseling agencies in that conversation.
So this is the conversation about the billing?
Yes.
Oh yeah, if you've got some thoughts, shoot me an email. And I'll try to, I think we posted what the letter was that we sent out, but I'd be happy to send it to you if you got some thoughts on that. That would be great. Yeah, good. Yeah, please. Thank you for volunteering. Okay, great. Well, thank you everybody for a good call. Thanks, David, for jumping in. And we'll be back in a couple of weeks to talk to you about other things. All right. Thanks so much, everybody.